Welcome to the Markets Happy Hour podcast, a weekly markets update for investors the world over. Each week we discuss inflation, geopolitics, interest rates, equity markets, and other asset classes. To try to answer the question, what does this mean for my investment portfolio? Let's dive in.
So starting out, clearly the news of the week was the U.S. Supreme Court striking down the recent tariff regime, suggesting that they were unconstitutional, not justified on the basis of emergency legislation, and that Congress should have stepped in essentially to validate and verify those tariffs. We can see that whereas that might have been resulting in simply the tariffs being removed and ultimately rebates being paid, President Trump is taking a more combative approach to this and suggesting that there will be more tariffs across the board. We can see that this is already stoking U.S.-China tensions. President Trump is just about to visit Beijing, and we know that there has been some fairly, I'd say, hardline rhetoric from China in respect to their potential to retaliate if U.S. tariffs are put in place. And we also know that now that the floodgates have been opened around other potential legal challenges around tariffs. So this has added to a stew of a fairly uncertain and volatile equity market condition over the course of this week. It seems that the appetite for more uncertainty when it comes to global trade is not particularly strong. The initial Supreme Court judgment could have resulted in a strong boost to the economy, as it would have added certainty around tariffs being removed and also offered the promise of rebates and checks being injected into companies who have already paid those tariffs. And it should have removed some of the inflationary impact which the tariffs were likely to have in a delayed form. Now, this current tariff tussle suggests that we're not going to get that likely uncertainty, although the rebates at least could be promised, although they might be slightly more complicated in terms of how they come. Moving to the equity markets. So before we discuss some of the flurries and the uncertainty around AI that has been circulating and cascading, we can see that despite NVIDIA showing really staggering numbers when it comes to revenue and really exceeding their own estimate, we can see that this has been really blowing through estimates in terms of a 94% increase that we've seen over the course of the last quarter. Of course, for a backward-looking indicator, but an indication that most of the expenditure that we've discussed in previous podcasts around the large CapEx spend has been flowing through into NVIDIA. What we do know is that there is concern around their exposure to the hyperscalers. And I'd say a degree of skepticism, a strong degree of skepticism that is receiving NVIDIA's earnings. And that has not been the boon that equity analysts were expecting, given NVIDIA had just announced. Staying on the area of AI, we have had a flurry of news flow over the course of this week, starting with that Citrini article that I mentioned, which laid out a fairly dystopian future when it came to AI. There was a suggestion that not only would AI disrupt software providers, but equally that traditional finance providers will be disrupted as the shift would move away from credit card infrastructure into stablecoin infrastructure, and that essentially many shortcuts and many intermediaries will be removed from the picture. This would also have translated into fairly sizable unemployment numbers and just that rupture. I use the word rupture that Mark Carney had used at his Davos speech, because that is definitely, I think, apt to describe what the Citrini research has suggested would cascade through established commerce as a result of AI. This was one potential future. We know that there is a binary, essentially, that there is another potential outcome, and that another middling outcome is for pretty much more of the same, some impact of AI, some efficiencies, but equally other shifts to managing superintelligence, which is this abundant intelligence that AI is likely to bring. So a lot of concern and sell-offs in the likes of Visa, MasterCard over the course of this week.